Power stocks are doing rather well for themselves. Almost everything power is doing very well. Now, it's no secret that power producers are under some bit of stress, be it their appeal in courtrooms, seeking some relaxation in the insolvency and bankruptcy court, or their struggle to meet repayment obligations. All is not lost, though. Merchant power tariffs are rising and plant load factors are posting a gradual increase. In fact, peak demand surge is foretelling a capex cycle recovery as well. So is the tide turning, and how big is the factor? How big a factor is coal availability for thermal power players like JSPL? Let's pose all of these questions to Mr. Bharat Rohra, the CEO of JSPL's power business, who joins us right now from Delhi. Mr. Rohra, good having you. Thanks so much for taking the time out. From the spot that you're sitting in right now, is the business looking like taking a bit of a turn? One, with the pricing the way it is, two, the raw material input cost the way it may be, and three, the demand that exists, because for an intermittent period, I believe demand had come off a bit relative to supply available.
Yes. I will start with the historical facts. In the recent past, what has happened was that the mine blocks were cancelled and all the IPPs were in a terrible situation. They were just facing the wall, not knowing what to do. But slowly and slowly, the government has come out with auctions, and the situation, they have tried to make amends. There is a high-level empowered committee which was set up under the chairmanship of the Cabinet Secretary. It has given very strong recommendations just a few days back, and those recommendations should be implemented as soon as possible to bring the power sector out of the mess it had gone into the last few months, or in fact the last about 4 years. As regards the demand for power, there was a surplus situation in the commissioned power plants in the past few years. However, recently capacity additions have slowed down because of the stress in the power sector, and the demand has increased. It is going steady at a pace of 6 to 7%, which augurs well for the industry. And with the recommendations being put in regarding the availability of coal, which this committee has also suggested, because the power purchase agreements were not coming forth at all. The utilities were just concentrating on either short-term or on day-ahead sales. And the generators were not getting coal for the short-term. So they were in a quandary as to where to arrange the coal from. Some of us started importing coal, and some of us resorted to hefty purchasing on the e-auctions, which jacked up the coal prices by about 100%. The last coal auction on the 5th of November saw premiums in the range of 2,000 rupees per ton on the coal which was auctioned. So that is a short-term aberration which we have seen, and with upcoming auctions coming in from the Ministry of Coal for captive power producers, and there are some auctions coming up for the captive users of steel plants and aluminium plants. So that should improve the availability of coal in the market.
Right. Sir, good morning to you, Mr. Rohra. Devina here. Just want to get your perspective on the government's commitment of 24/7 power to all that they're making, and the focus now shifting from just power supply to reliable power supply. And with the current scenario of the supply shortages of coal and the irregular supplies, with an increase in demand coming in from domestic households as well, which is sort of starting to peak off and will likely see an increment in FY19, how is the power sector looking to tackle this?
You see, the government has come out with very ambitious programs, Power for All, and various other schemes. However, in these schemes, the state generating companies, they are, I feel, not geared up to purchase power from the generating companies because of the problem in realization of the power bills that they have to pay for. So there is still a report today I saw in the papers which is showing that there have been power cuts in the range of 6 to 7 hours in the month of October. That's the average power cuts which have been resorted to by the DISCOMs. So that means the DISCOMs, rather than buying power, power is available in plenty, But they are refraining from buying power and they are resorting to power cuts because they are not able to realize the payments from the consumers.
What does that do for the realizations for a power generator?
No, you see, our realizations come from the discoms with which we have done the power purchase agreements. And our agreements are on a long-term basis with Kerala and with Tamil Nadu. Although we have just tied up about 25 to 30% of our power with them. But we are getting paid regularly by Kerala. And by Tamil Nadu also, we are getting paid on a lag of about 2 to 3 months. So for us, payments are coming, but the discoms, whenever we approach the discoms, we feel that the only thing they express is that they are waiting for funds from the central sector, they are waiting for funds from PFC, because they are not able to meet their ends.
Mr. Rohra, something that is on the minds of a lot of investors and a couple of companies alike is the decision that comes in with regards to Adani Power as well as Tata Power's projects. I believe the Supreme Court 4 weeks ago had given a deadline of about a total of 8 weeks for the two parties to resolve the situation amicably amongst themselves. If indeed the decision is in the favor of the power companies with regards to the PPAs, does it set a bit of a precedent, and would companies like you be able to make an appeal for some of the projects which might be under duress for you as well?
No, you see, the case of Adani's and Tata Power is different because the law changed in Indonesia, and the nature of their change of law is totally different from what has happened in India. In India, the regulators have very clearly defined the change of law, and we also, JPL has filed claims on Tamil Nadu for change of law, and our claims are pending at the discom because they don't have funds. So it is payable. It has been established by the state regulator. However, because they don't have funds, so the discom has gone into appeal in the appellate.
So let's talk about...
and this aspect has been covered by the...
Right. Go ahead, sir. Finish your point.
Yeah, what I was saying is this aspect has also been covered by the high-level empowered committee, and they have recommended a mechanism in which change of law cases will be taken care of. So we as generators, we do not have to go to court to take relief the way Adani and Tata has done.
Okay, got that. So let's talk about what's it going to look down the line by FY19 as it kicks in terms of whether or not realizations can see a little bit of a pickup. What are the plant load factors going to look like? Are you going to be increasing capacities to any extent, and volume expansion as well?
Yeah. You see, we have an installed capacity of 3,400 megawatts as a IPP, and the entire 3,400 megawatts is operational. Presently, solely due to non-availability of coal, we operate the plant at about 32 to 35% PLF. That means we are just about able to generate 1,300 to 1,400 megawatts and service the power purchase agreements that we have on hand. For rest of the installed capacity, we do not have coal and we do not have PPAs. We are not counted as a stressed asset because we are able to service our loan interest every month. But we are facing a lot of stress for arranging coal for the balance generation. And now we have resorted to imports to be able to meet the expected spurt in demand in the next few months. You see, every generator is feeling that in the next 6 months there is going to be huge demand for power, like it was in the month of October when the prices went up substantially high. So we are also anticipating the same, and to meet our requirements, we are resorting to imports.
Right. So what would the cost differential be now?
So going forward in the short term, I didn't get you, please. Can you repeat?
I was asking you about the cost differential now that you're looking to resort to imports versus domestic coal linkages.
You see, because of the low availability of coal from the SECL and from MCL, the requirement that we need per month is about 7 lakh tons of coal we need every month. We are able to get only 3.5 lakh tons per month from these FSA allocations. Rest of the 3.5 lakh tons we have to import on a monthly basis, or we have to buy from the auctions. The auction prices went up sky high, and we found that it would be better to import high calorific value coal than to take the price in the auctions to absurd levels. Because if it goes to continues at those levels, then there will be no return for us. So there is no point buying costly coal and burning it and then not generating any money out of it.
Right.
So that is why we have resorted to imports.
Okay. Mr. Rohra, okay, Mr. Rohra is still with us. Mr. Rohra, one final question from my end really, and that is what some quarters of the market believe is a structural change and not a short-term change. Is Saubhagya's impact on peak demand positively surprising? And what all of this mean for a fresh capex cycle on the power side? Now, do you reckon that if not now, then in the next 12 to 18 odd months, we could enter a period where we could see fresh capex from the power companies? And if that is indeed the need of the hour, how would companies fund that?
You see, as far as my assessment goes, the level of stress in the power sector is so huge that no private sector developer would like to venture into any more capex in the power sector. Yes, NTPC is doing capex and they will continue to do so because of the PPAs they get on a platter. But none of the private companies are getting any PPAs for medium term or for long term. So I am not expecting any of the private sector players to go into the capex mode. Yes, we people are planning to go into a consolidation phase. Big players like Adani's and JSW, they are all looking to the cases being referred to the NCLT. They will try to pick up some of those plants and then turn them around by putting in some capex into those plants. So that is the only capex I am feeling that will come into the thermal sector. I don't think any more capex will come into it.
So just on the back of this, and while the expectations are that by 2023 you'll see a significant uptick in terms of demand, and those that are probably well placed in terms of their overall capacities, who have the power generation capabilities right now, will be the ones to take the benefit out of it. So be it from acquiring assets which have been with the NCLT, stressed assets which have been with the NCLT, that will probably be the next way to go instead of going ahead and prepping for new power generation and building new capacities. Is that a route that probably you would consider?
You see, the plant load factors have dipped from about 78% to just less than 60% in the previous year. So that means that a huge capacity is lying unutilized, primarily either due to the stressed condition or due to non-availability of coal. These are the two causes of the unutilization of the capacity. The capacity is there. So whatever demand will come from Saubhagya, it can be met from the existing capacities, from the thermal side, only if abundant coal is made available to them. And another committee has been set up by the government to reduce the transportation, crisscross transportation of coal which is happening in the country. A committee was set up last month in October, and they have a mandate to give a recommendation within 4 weeks. So with that, if the rationalization of coal transportation takes place, then coal availability should improve, and large number of pithead power plants should start getting coal in the next 12 to 18 months.
All right, got that, Mr. Ross. So what you're saying is that you probably need not go ahead and bid for more of the stressed assets, because any which ways there's a lot of capacity lying idle right now because of the non-availability of coal. We leave it at that, Mr. Rohra. Thanks very much for taking out the time. That's the management of Jindal Steel and Power.